Markets are uncertain by nature. We never know in advance how a move will develop, and pretending otherwise is where most traders lose discipline. Instead of prediction, I work with scenarios. And in this video, I'll walk you through the 4 trend scenarios that, in my opinion, every trend following trader must be prepared for. So we have a steady control uptrend, a climax run, a super climax run, and a trend failure. The objective isn't to judge price action, cling to belief system, or react emotionally. It's to have a precise plan defined in advance so execution remains crystal clear regardless of what the market decides to do. And let me be honest about what to expect from trading. It's not magic, okay? Some trades won't work. Many will be average, and a few rare ones will be responsible for a disproportionate share of the overall performance. My trading plan and the way I manage these 4 scenarios is designed to keep me present and aligned when those rare asymmetric opportunities appear. There's no noise, there's no emotion, there's no improvisation. It's just structure, discipline, and execution day in, day out. That's what my trading and this video is about. Remember to subscribe for more insights like this. Let's dive in. We're going to talk about the 4 scenarios that every trading plan should account for, in my opinion. This is what I use in my trading. This is part of my trading plan. All these 4 are accounted for, and I have a specific plan, specific rules which I follow if I fall into any of these scenarios, right? So the 4 scenarios are a steady uptrend, which is going to be a staircase, right? From a breakout, I trade breakout and I go with the trend. From the extraction of a quality pattern, a healthy, steady uptrend is going to build stairs. It's going to build a staircase, right? Steps. And these steps that I call the up steps are consolidation. They are pause in the uptrend for the price to basically correct a little bit, people to take profit, new buyers coming in. That's healthy and that's sustainable, right? That's not going to be too steep. It's going to be a steady uptrend, beautiful with steps. And I'll show you that. I'm going to show you a case scenario for each of these on actual trade, real trade that I took. The second one is going to be climax run. So that's when the rate at which the trend is going, which is accelerating, right? So, we had a bit of something diagonal like that, sustainable with some corrections, and then suddenly price start to get more vertical. So we need to be more aggressive with how we are managing the trade and how we are trading our stops there. The third scenario is going to be a super climax run. So that's a climax run on steroids. So that thing is getting even more vertical, almost like completely vertical. That's like exponential move, and that's not going to last. It's going to snap back, and I'll show you a scenario there. And I mean, this never fades, right? Nothing goes to the moon forever. It does not. So you have to be even more aggressive and have a strategy to really stick to the price as it goes up and squeeze as much as you can before the snapback. And the fourth scenario is failure, meaning you enter a trade and there was not enough momentum. The trend reverses and hits your stop basically before you could take any profit, partial profit, or trail your stop. All right, so starting with scenario number 1, that's going to be on Leonardo, ticker DRS. It's a trade from early 2024. The green line is my entry, the red line was my stop. So you can see we had a beautiful pattern there, beautiful trend. That was a new ticker from end of 2022. Beautiful consolidation there, extraction, breakout, take position there. And as you can see, right, this is building a beautiful steady staircase and a great way to manage a steady uptrend such as this. I'm going to write it down there, steady uptrend. A great way to manage a trade like that is to actually draw the steps of the staircase or boxes, and this was actually popularizing by Nicolas Darvas many decades ago. You can go and read about it. There's a book actually that he wrote and how he made a fortune basically trading stocks as he was traveling, and he was a dancer and so on. and he has an amazing way to actually monitor his trade and stick with it by drawing these boxes and giving them rooms. So you can draw these boxes such as this, right? And the top of the box is basically the level at which if price close above, then the box gets validated and you're kind of safe to bring and trade your stop under that box somewhere there, right? The bottom of the box is going to be the bottom of the correction of the post. So we had the beautiful box right there, got closed above right here on this one. We had another box there. This was albeit a bit small, but it counts, closed above there. So price penetrated the box right there, right? So it depends if you're using physical stops or not. If you're using a physical stop, yeah, you're gonna be taken out right there, right? If you're using a mental stop, usually what I do is I would put a physical stop below the candle that crossed basically the bottom of my box, right? Which would be there, right? So there I'm giving room for the price to breathe. So we are building another steps here, and this one took longer. You see, it's longer, it's deeper. That's the other box. Confirm there. We're building another box there. Confirm there on the break. We are building another box right there, and this one never quite. It did work out eventually, right? But I mean, you can see how far you can go with these, right? This you can see here we have a mental level there. You see the price never came back close to the bottom of that box. That's a steady uptrend. And look how long we can stick with that trend, right? And every time I can bring my stop somewhere in that area. Look how long we can do that. So all these are validated boxes. There, 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 there. And that's when basically, and we've been in that trade for a long time, right? 2024. So we would have been taken out somewhere there this year, end of the year. So that's a steady uptrend, and that's how you can use basically pauses and corrections to trail along the price. The second scenario that's going to be on gold from an opportunity from this summer on the 1st of September is going to be a Climax run. So depending where you put your stop, right? I don't remember if my stop was there or there, but you can see how price there is really going up in a steep way, right? So this is not something that, and with gaps, you see gap, 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 gap. So you're not gonna let price drop back and snap like that, right? It's not steady like the previous example I showed you. This is really shooting up big time, right? Look, you only have weeks of upside there. So you need to have a way to trail that, and a great way to do that is actually you can also drop on a smaller time frame, on a daily. I use daily time frame for entry and fine-tuning breakouts in my analysis. So assuming that you validate at some point, and that's for you to decide that. I have a way to do it, but for you to decide that at some point, if you assume that, I mean, you can't trail your stop on the weekly time frame because you just have candlesticks stacking green, 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 green. So you can't trail your stop, right? There's no way to do it. So if you feel like you're on a climax run or you're worried about the snapback such as that, right? One way to do it is drop on a smaller time frame. You can drop on a daily time frame, for example. And you can use the same technique with the boxes, and you draw it on the daily time frame, such as this, right? And that allows you to really stick with a trend, right? Whether you want to place a hard physical stop under the box, or whether you want to, do it a bit like I was suggesting, use the candles that break through and then put the physical stop under. You see there, we would still have been in the trade. That candlestick broke through the bottom of our box. We place our physical stop a little bit below, giving it some room. We are forming another large step there. And I mean, we are forming another large step, but at the moment that we are snapping back and so on, we are not in a climax run anymore, right? So I would go back to my weekly time frame, and I can just resume my staircase, right? And that's it. And my physical stop was somewhere there, so it's perfect. So that's how I manage climax runs. Drop in a smaller time frame and apply the box strategy on that time frame. Now, how do we manage a super climax run? And sorry, I am still in a logarithmic scale, but yeah, if I go back to the previous trade call, actually it's more impressive like this. Yeah, now you can appreciate more the climax run, right? So moving back to a super climax run, I mean, look at this. This is like vertical, right? You can just feel like this is not going to last very long. So there, definitely we can't trade our stop on a weekly time frame. We don't have any correction or pause, right? This is even more aggressive than the gold trade I just showed you before. So if we drop on a daily time frame, we actually have the same issue. On a daily time frame, we barely have any look there. We have no opportunity to trail. So what you can do is, if you feel like you're in a super climax run, which is basically a move so steep that it's gonna snap, and look at the snap, boom, boom, boom. It was like, sometimes these happen and it just collapsed back down, and you look, even this, right, collapse. So you see that was my entry early 2024, and the price literally went back down. Okay, recovered a little bit, but that was massive correction, massive, like the party is over basically. So how do we make sure we squeeze as much as we can from a super climax run? Well, one thing I like to use is trailing under each daily candle. If you feel like you're in a very steep climax run, drop into a smaller time frame, such as a daily, and then trail under each candlestick, and with a bit of room. And this allowed you to really stick with the trend. You give it a bit of room. Stop, not touch, stop, not touch, gap, stop, not touch. And yeah, you have to, there you get taken out. The high was there. We got taken out around 90 something, but you have to sacrifice a bit of profit, but look how high we exited, right? And that's still 150% not profit, depending on how much you risk, but that's still 150% that you squeezed out of this stock. That's like massive, right? That's a massive trade. So yeah, it's just beautiful, right? So that's the third basically with trend and scenario. And now if we move on to the fourth one is failure. So let me move back to my weekly time frame and look at this. We had a nice, steady, beautiful uptrend. We had a nice, clean little pattern there. We had a clean break, take position above the high. My stop was somewhere there, and the price just turned down. It just turned down. That trade did not work. You see, we retested the resistance, which became support. We tested it. We tried to move back up, didn't work, and we just bam, headed straight for the stop. And this happened. This will happen sometimes. And that's okay, right? This is part of the trading plan. So, whenever we approach my stop, either you have a physical stop or you can have a mental stop, where when the candlestick touches, go through your mental stop, you can put a physical stop a bit below to give it a last chance to go back up. Why? Because we place stops below like little corrections or bottoms, right? So there on this neat cup and handle, the stop was below the low of the handle. So whenever a candlestick touches it, there is always a chance that price bounces back, right, of that level. That's why we give a little bit extra wiggle room. And here it just didn't work. That's also part of my plan. I'm not hoping that this will recover and holding my trade and look at it just sinking into the depth of the abyss, right? I am not. If it touches my stop, or if if my plan tells me you're out, then I'm out, and that's it. I move on and I wait for the next opportunities. Even this trade, look, it recovered and just like, yeah, it went hard and fast. But it is what it is. I don't care about the next part of that trade, right? That's it. That's where I take position. That's where I apply my trading plan. If I'm taken out there, I'm not taking another position after, unless I have a clean all, basically my 6 ingredients for an explosive trade, which I didn't have, right? I didn't have an opportunity there to take another good position as per my rules. So I stay out. And that's it. These are the 4 scenarios that I use to trade with the trend. And in my opinion, yeah, every trader should account for that. I mean, this is super handy. This is what I use daily. Like that's it. There might be a bit finer rules and fine tunings and a bit more advanced stuff that I do use, but these are the basics basically. And I really encourage you to think about case scenarios that you've encountered in your trading and ask yourself, how do I account for these, right? I'm sure it happened to you that price exploded, and how did you account for that? Did you stay with it until like too late after it just snapped and you missed out on a lot of profit, or did you exit too early? So ask yourself this and my advice would be, try and design a plan which has these scenarios included, because you will face these if you're trading stocks or even crypto. You will face these, right? These are just characteristics of trends, right? The rate at which the trend is going to progress can fall into either of these scenarios, and you want to have a plan to account for that. I couldn't trade without it. I do not rely on judgment, right? There is some judgment, sure, when I'm going to assess the quality of a pattern, how is the contraction, how is the breakout, and so on. Sure, there is some judgment there. However, once I'm in the trade, there's no judgment. I have a set of rules which I follow, and it's mandatory for me. I can't trade without this, because I don't want to be depending on how much capital you have or how much risk you've taken on a trade. I don't want to be second guessing myself. Oh yeah, but maybe this is gonna go up, or maybe it's gonna correct and gonna come back. No, I don't want to leave any room to chance, luck, or guessing. I expose myself to asymmetrical, explosive opportunities with high potential of reward. Some of them are not gonna work, right? A small percentage are not gonna work at all, like this one that I showed you. This did not work at all. Some of them are gonna work a little bit, so I'm gonna have small gains, small losses. That's gonna be most of the trades. Actually, they're gonna be a little bit positive, and just a tiny fraction. Usually it's about 10%, right? So 1 out of 10 trades roughly is gonna deliver like the vast majority of the performance. If you go on my website, you'll see that's exactly what happened, right? Out of about 40 trades for the past almost 2 years, I think four or five were responsible for the entire performance, because the trades that pay are these kind of trades, right? They are also these kind of trades. These are the ones that pay, and that's why I need a plan to be ready to squeeze out and to follow along when these scenarios show up. So I hope that was helpful. If you have any question, feel free to reach out, and remember to subscribe, drop your mail on the website if you'd like to get posted on news and more content like that. Thanks for watching, and see you soon.